Hello, and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back with your South King County Real Estate Update for the week. And go ahead and jump on into the slides. So today is May 27th, 2022, and what happened this week? This week was, I had a little bit of a disappointing weekend, I guess. I've been working with these clients for a while. I've talked about them a few times recently on the show. They're looking for a home, very specific. They're comfortable where they're at, but they just want to find the perfect home for their next home, their retirement home. There's certain things that their current home doesn't have that they would like to have in their home. So we've been looking for a long time and put in an offer last weekend, and I really thought we had it on lockdown, but I got the call saying no dice. They went with another offer, despite the fact that ours was slightly higher. Ours escalated $10,000 over the next offer, next highest offer, but they decided to go with that $10,000 lower offer rather than our offer because the other offer had higher earnest money. Guess lesson learned there for both me and the client. I knew they wanted more earnest money, but we just didn't come up high enough. If there'd been a little more communication from the listing agent, possibly we could have locked it down, but communication kind of shut off there at the end, and we lost out. So unfortunately, that did happen, but we found a home that maybe they like more. So we're gonna check that out this weekend and see what we find. See if we can lock it down if it's the right home for them. Over the past few weeks, a lot more inventory coming on the market, some buyers ducking out of the market. Competition has decreased a little bit, but certain price points, certain areas are still in incredibly high demand. The days on market is still incredibly fast. So even though the market is softening a little bit in some areas, it is very area specific as to, and price point specific as well, to where there's a decrease in demand and an increase in demand. So go ahead and jump back on into these slides. So this one, it's not as relevant here in Western Washington, but I did think this was really interesting, and it could become more relevant in Western Washington in the future. So I thought I'd just pop this out there, put the bug in your ear. Planning on buying a house in Washington, you may want to check the wildfire risk. So there's now a list that's a bunch of data points compiled to assess wildfire risk in various areas in Washington. So this is a nonprofit group that put this together. It's based on an annualized risk for wildfire. The group projected the share of properties at risk for fire this year and how that will increase over the next 30 years as climate change continues. There is an interactive map associated with this article. I'll show you the map in just a second, but mine's screenshot, so it's not interactive. But if you are curious about this article, I found it pretty fascinating, actually. I highly recommend you pop over to the Seattle Times and check out their interactive map there. So local experts are expecting worsening wildfires in the future just due to climate change, hotter conditions, drier fuel. The less rain we have, then the more fires we have, unfortunately. We did have a wet spring this past year, so that will help a little bit, help delay the fire season, but they expect it to pick up in July and August. So here's that map I was talking about. This is the 2022 risk. So you can see the vast majority of the risk is on the eastern Washington side. So here in South King County, we don't have much of a risk of wildfire. However, they do happen in the area. I have a friend who's actually an agent in Auburn. She had a wildfire near her house last year. It wasn't very large, but it was a little bit scary. So it is something that we do have a little bit of worry about in our area, especially those large fielded areas and that. But as for now, the vast majority of the risk is in Eastern Washington. This model uses information regarding the fuels, weather, historical wildfires, and a variety of other metrics to estimate the likelihood of a burn in a specific area. And real estate agents in those fire-prone areas are learning how to talk to their buyers about wildfire risk and learning what these tools are. So I know this is kind of a South King County real estate update, but I know a lot of people from South King County have vacation properties or thoughts of buying vacation properties elsewhere and that. So it's just something to keep in mind. And I think it'll become more relevant in Western Washington as we move forward in years. And the cost of mortgage payments is climbing. Washington is among the worst in the nation. I don't think this is probably much of a surprise to anyone. Our real estate prices here, especially in Western Washington, have just skyrocketed. Well, all over the nation, they've skyrocketed, but Western Washington started out at a much higher price point. We just have one of the highest price markets in the nation. So the fact that it takes a higher mortgage to purchase a home here is not that far of a stretch. But the monthly payment for a new mortgage in Washington hit nearly $2,800 last month. And that is $811 higher than the same time last year. So remember, this is all of Washington. So this is taking the Seattle and East Side high price properties into account and averaging it with the rural areas across in the entire state of Washington. So $811 higher as an average from the same time last year. And that's $1,000 more than April 2019 pre-pandemic. Nationwide, the median payment hit $1,889, up $153 from March. Home prices skyrocketed after the pandemic, and now we are seeing mortgage rates increase. That's crossing with inflation. So prices for everything are going up, prices for homes are going up, and interest rates are going up. So it just is all coming together to be a little bit less affordable situation. And here is that mortgage payment graph. This goes back to 2009. So you can see how much we've increased in the past 6 months. This has been incredibly quick for mortgage payment growth. We were kind of on a steady rise as home prices were growing, but mortgage rates were staying steady. And then when mortgage rates jumped, so did the mortgage payments. Washington borrowers saw the third highest median payment in the nation in April, behind California and Hawaii. And this is a quote from the Mortgage Bankers Association. Mortgage payments are taking up a larger share of home buyers' incomes, and sky-high inflation is making it more difficult for some would-be home buyers to save for a down payment or come up with the additional cash they need to afford a higher monthly payment. A lot of people are buying down their rate right now. When you close, you can bring extra money to the table and get a lower rate, but a lot of people don't necessarily have that option. There are a lot of people in our area that are very well paid. Amazon and Microsoft have both said they will increase pay based on what's happening with inflation. We could see some homes in the area get more affordable for specific individuals whose companies are keeping up with inflation on their pay, but it is going to get real hard for a lot of people that are kind of on the edge. If they are not in one of those tech or those high paying jobs that the business can afford to keep up with inflation, it's going to be a real challenge for renters and buyers that are entering the market. And the median rent for a new lease on a one-bedroom apartment in Washington is $1,303, up $184 from last April. In Seattle, one-bedroom rent was almost $1,600 per month, up $220 per month from a year ago. That is a pretty significant increase. And anytime housing prices go up, that gets passed on to renters as well. This came from the National Association of Realtors yesterday. Pending home sales hit the lowest level since 2020 and fall 3.9% in April. So pending home sales is the metric that leads sold homes. So pending sales is kind of what we want to focus on. How many homes are going pending, how many are staying on the market, and all that. So you can see pending homes has decreased for several months in a row. At first, it was due to the lack of supply. Now that's still playing a role, but now the higher interest rates have knocked some people out of the buyer's market, and really things are just getting a little bit less affordable overall. pending home sales. This is just a line graph showing all of the 4 Northeast, Midwest, South, and West. The dark blue line is the US. So the US is at 99.3 for the home sales index, which is based on the 2001 baseline. In the West, we are a little bit lower on that scale. So we've taken a look at the showing traffic in North America a couple times recently, and it is continuing to decrease. Remember, it is a holiday weekend, so there is the possibility that this is just a fluke or like a one weekend thing as far as the traffic going down this much. We'll just have to kind of keep an eye on it. It has been trending downwards since April. And that brings us to our Market Stat Minute. We had 840 new listings in King County, 961 pendings, and 903 solds. And I found it curious how much the new listings had dropped over here. It had jumped up a lot last week and then jumped way down this weekend. But that again could be due to the holiday. People could be holding off for the next weekend, so we may see a jump then. For our local area breakouts, we have basically neck and neck in Kent for new listings and pendings. Everywhere else has fewer new listings than pendings. So Kent may have a little bit more to choose from based on how many buyers there are looking in that area than Renton, Auburn, or Federal Way. And last week, we had a weekly average mortgage rate of 5.25. This week, our weekly average mortgage rate is 5.1%. So remember, this is kind of a Monday to Monday comparison. If we look at today's rates, we are back at 5.25. So it has, fluctuated up and down throughout the week, but we are back up just a little bit from where we were earlier in the week. And this is just a historical look at the 30-year mortgage rate versus the 10-year treasury rate. So the 10-year treasury rate is controlled by the Fed, and the 30-year mortgage has followed that for almost 50 years. If we look at it just from January 2022, we can see the lines following the same trends, of course, but it is a scary graph if you just look at it from the beginning of this year. If we look at it on a historical basis, this graph goes back to 1972, where we had pretty low interest rates at, 7.5%. That was pretty low, and it went up to over 17% here, and then has been on a downward trend ever since. So we have been in a really low interest rate environment. This is ending at 2021. So if we look at this chart, it is incredibly good. And then this one starts and we start to head up again. You can see on a historical scale, we really aren't doing too bad. We've kind of hit like historical average. This is just driving that point home. Since the 2010s, we have been in an incredibly low interest rate environment. If we look back, 1970s, 1980s, 1990s, 2000s, all of these decades had much higher interest rates than we are seeing right now. The current rate is 5.25. So this is a fairly good interest rate on a historical basis, even though we have seen much better rates over the past decade. And if you have any questions, please feel free to reach out. I would love to have a conversation with you about the real estate market in your area or an area that you're interested in, or just, chat about these news articles, the possible upcoming recession, whatever burning questions you have, reach out, let's chat. Thank you so much for joining me. I will be back here next week at 3 p.m. With your South King County real estate update. I hope to see you then. And until then, have a fantastic week. See you later.